to trickle down. And the reality is that exploration is an important part of the life cycle for the mining industry. You have to be out there looking for new deposits to be able to replenish the ounces that you're mining. We've seen a peak or an increase in the amount of gold that's being mined today. The gold price helps with that. The higher the gold price, the lower the cutoff grade becomes, and more gold is mined from the ground. So this is just a snapshot of different companies within the mining industry, from the larger side, from the mid-tier side. And you can see that many of them have seen a decrease in the amount of gold that they have in the ground since 2016. And for those that have seen substantial increases, the ones to the right, is there a laser pointer here? I'm not sure if that, oh, it doesn't work on the screen anyways. For the ones on the right, the big reason why the reserves have actually gone up is because of M&A. So they've transacted, they've acquired companies, and they've picked up ounces in the ground to increase their reserve base. The other thing that you're seeing here, and that's reflected in the orange line, is that the gold price assumption that's being used to calculate the gold reserves has also increased. So what you see basically here is a disconnect with the amount of gold that's in the ground and investment that's gone into exploration, which means that companies need to look for deposits, and that's going to come through exploration companies. And what they're looking for specifically, I used to run corporate development for OceanaGold, and what we were looking for were companies that were in the right jurisdiction, had the scale potential. So a lot of the larger companies are looking for things that have the potential of being big, and that's the potential, not just the scale, but potential in terms of multiple deposits in the land package that you have, and then the right team to be able to extract value. You could have a tier one asset with poor management that destroys the value of that asset. You could also have very strong management with a mediocre project that creates value for shareholders, and that's why board management is very important. And you can see on the table to the right, the larger companies are making strategic investments in junior companies. So you can see a list there. Agnico leads the charge. You know, they've got 26 companies that they're invested in, different ownership percentages that they're invested in, Barrick, B2 Gold, Goldfields, etc. We have one. We have B2 Gold. So they're a strategic investor in us. But the point of this slide is that the larger companies are looking at exploration companies to invest in, and they have no choice. So Newfoundland is, again, as I mentioned, in eastern Canada, a lovely province to visit, not in the winter, but most of Canada is probably not a place you want to come and visit. So it is, when I left Oceania, I believe Newfoundland would be the next mining district, the next big jurisdiction for mining in Canada. And that thesis is starting to play out, especially with the Valentine mine, which has gone into production. So that's in the middle of the page there. It just went into production and will grow to become a 200,000 ounce a year gold producer. We are the largest land package on the same structure along strike as Valentine. And you'll see on the next slide specifically what I mean, but Newfoundland has seen M&A activity. Valentine's been acquired twice. Equinox Gold now owns it. And then Newfound Gold acquired Maritime Resources. So there's been more M&A activity on the island. Specifically where we are, I believe where we are, the belt itself, is where the next mining jurisdiction is taking place, starting with the Valentine mine, which you can see there. You can see, I often say a picture's worth 1,000 words, and you can see our land package relative to the Valentine mine and their land position. So we have a gold resource. It's 610,000 ounces at 2 grams, shallow mineralization. It was calculated a few years ago when the gold price was $1,700. So one of the things that we're working on this year is to update our resource with an aim to get that over 1 million ounces, plus include silver, which is excluded from our current resource because there are a number of drill holes that need to be assayed properly. But historically, there's been 1 million ounces of silver in this resource. So fully funded, we announced a $30 million capital raise, which I was up 3 in the morning this morning going through a shareholder vote to ratify the second tranche of financing. So the closing on that is expected early next week. But basically, we are fully funded, and we have a world-class shareholder register. So most junior companies would love to have a couple institutional investors. When you look at the shareholder register of most junior companies, they would have maybe 5%, maybe 10% institutional ownership. We have 60% institutional ownership, plus another 10% ownership from B2 Gold. The list of substantial shareholders is there on the chart to the right. So we've added Condier Investors, which is a Texas-based investment fund, which initially started their fund at $30 million US 10 years ago, and today it's a $3 billion fund. So they've been very successful in identifying opportunities and going in large in terms of those opportunities. And you can see the rest of them in terms of substantial shareholders defined by greater than 5%. So B2 Gold, Nokomis Capital, which is new, from Texas as well, Franklin Resources in California, Schroeder's investment in London. So for a $36 million market cap and $30 million of cash once second tranche closes, I feel like we're starting to get invited to this party, and it's really the beginning of it. Strong team, as listed there. This isn't a board created for a junior company. This is a board that's created for something much larger, which is commensurate with the shareholder register we have, but also the land package that we have. The newest board member we have is James Whitnall. Any of you who've invested in Rupert Resources, James was the CEO at Rupert, who made Rupert into what it is today, over $1 billion market cap. And he believes that this is the next Rupert Resources. I hope he's right. So in terms of the re-rating pathway, so we've got resource growth, as I mentioned, from our existing resource. You're always one hole away from really making it big. Rupert demonstrated that through the work that they did. Some of the junior companies have demonstrated that. And we've got the potential for district expansion. So we're not just looking for one big deposit. We're looking for a series of them. Our flagship is Cape Ray. It's highlighted there in blue. Once this becomes a mine, would become a very easy place to operate. 20 kilometers from a highway, close to the town, which is 4,000 people in population, connected to the highway, connected to a seaport, hydroelectricity. So we've got, as I mentioned, 610,000 ounces at 2 grams. When you look at the history of exploration in Newfoundland, you look at the history of the exploration that's taken place on our property, there's been a lot of drilling, but the drilling is actually focused in the same areas. A lot of juniors have a little bit of capital, so they play it safe. They drill what they believe is going to give them a hit so they can go back and raise more money and then keep going until the lights run out. We're the 7th company to own this project. The 6 companies prior to us drilled the same thing over and over and over again. And when you look at the cross-section here on that image, there's a lot of area that just hasn't been drill tested, a lot of gaps between ore shoots. We're going through this exercise right now where we're relogging core, and we're finding an exceptional amount of gaps in the data, and that's for us to go in and drill and plug and add ounces fairly easy. A new area, which is several kilometers away from where we have the resource. The resource is highlighted in those blue outlines. You can see the pink blob. That's a massive intrusive unit that for 3 decades people said was not mineralized. We did some work there last year. Lo and behold, it is mineralized. So it's a massive intrusive unit that's come up. Everyone thought that because of the age of that intrusive, it's not related to the gold, but we're seeing gold right on top of this thing, which is the highest point in the entire area. This backdrop is similar to Snowline. For any of you who invested in Snowline or just invested in it or are familiar with it, they had the same setup where you had an intrusive unit that people said was not mineralized. They did the similar work that we did here, where you had gold and till anomalism around the fringes of that intrusive unit. They drilled it, and now they've got 9 million ounces, and they're trading at a couple $2 billion. So we're hoping for the same success. And we're seeing from the image on the bottom right, we're seeing this high-grade core of copper, moly, and bismuth. So this looks a lot like an intrusive-related gold system. It could be a porphyry, we're not sure. But the reality is that people have dismissed it, and we've identified that, you know what, it could potentially be the source of the mineralization that we're seeing in the area. and it's, as I said, only a few kilometers away from where we've got a resource. So this is where we're going into in the next month or so. We're going to get boots back onto the ground once winter is over, and then we're going to start drilling this target that's never seen a single drill hole. Further up on the belt, Bunker Hill, and I should have added that between where our deposit is at Cape Ray and Valentine, it's about 200 kilometers. Much of that has just never been explored. And so Bunker Hill is another example of that, an area that is large, that no one has done prior exploration work on. Last summer, we covered it in, basically dug up the area looking for gold and till anomalism. To the west, we've got several targets that we're looking to drill this summer. And then to the east, we've got a significant amount of copper, lead, zinc, and silver. So with Bunker Hill, we're not quite sure what it is geologically. It looks like a couple different systems that are taking place here, a couple different types of geology. To the east, we're thinking that that could be a VMS system. Newfoundland has large VMS deposits historically. This is an area that's, again, we've seen very little in terms of exploration. We've got copper samples that are 57% copper. So there's some significant base metals here, and we're planning to drill this area again in the summertime. Wanted to show that Valentine, the graph there in terms of its progression, they were like any other junior company, drilling the same things over and over and over again. In 2014, 2015, they got new financing for some significant shareholders, including Pierre Lassonde, and they used that money to drill new targets. And you can see once they started to drill new targets, their resource grew exponentially to what it is today, 5 million ounces. They believe they have 10 to 15 million ounces. But you know, Equinox has done a very good job in terms of exploring these new areas and making new discoveries. That is very positive for us, because this is basically the playbook that we're looking to follow. We're going to start drilling some of these new targets that no one's ever bothered to drill, and hopefully we have the same success, if not better, than Valentine, but basically looking to grow or create that wealth. For shareholders, and basically our strategy is very clear. We're not looking for small, we're looking for big. It's in the name, it's deliberate. You know, AuMEGA is how you pronounce it, and that's what we're looking for, is to find the next big deposit in Newfoundland. I should say the next mega deposit in Newfoundland. Thank you.